Thank you, everybody, for joining us. And tonight we have with us Kris Colcock. Kris and myself, Lori Scharff, are certified work incentive practitioners. We hold our certifications through Cornell University. And Kris also has a second certification specifically working with youth on benefits counseling. So tonight's webinar again is Employment Connections, Maximizing Social Security Work Incentives. And this is part one, covering Supplemental Security Income. So Kris, can you tell us a little about what Supplemental Security or SSI is?
Sure thing. So a supplemental security income, SSI, is under Title 16, and it is a needs-based program. This is for someone who is age 65 or older, blind or disabled, and their resources are very limited. Maybe they only have a little bit in the bank. They can't have more than $2,000 for individual, $3,000 if you're married. And so they're going to be, when you apply for SSI, they're going to want to know, what resources do you have? Do you have a source of income? And are you disabled?
Okay, great. And with SSI, that means test applies the whole time that you're on your SSI benefits. So Social Security does have the right to search and see what funds are in any bank accounts with your name on it. So it is important to keep track of that $2,000. So even if you have a joint bank account, say with a friend or a relative or somebody that you might share living space with, it is important to keep in mind that those accounts are looked at as well. And if you go over that $2,000 amount, you certainly could jeopardize your eligibility for the program. So,
Lori,
yes.
yeah, sometimes people don't understand when they do start working and they want to save for the future and they're putting money into an IRA. That
Mhm.
IRA also is counted as resources.
Yes, correct. Um, Also, if you have a Roth IRA or anything along those lines, that would
Right.
count, checking account, savings account. Great. So tonight, what we're going to do is we're going to go over some definitions so that you have a better understanding of what the SSI program is and how to use work incentives. We specifically will be covering work incentives, primarily for individuals 18 and over. And um, so we will focus on those areas and work through a bunch of information to help you understand the program. And then we'll move into a little example that we've written up and we'll go through some figures. We will not be discussing tonight supplemental nutrition assistance or SNAP, and we will not be covering the health benefits, Medicaid or Medi-Cal, those types of programs associated with the SSI program. Those are very locally specific types of benefits and would take a lot of extra time. So, great. So, Kris, is there an amount that everybody on SSI receives across the country? Does everybody get the same amount each month?
Well, if you are eligible for the full benefit rate, you do get a maximum of $967 a year, and that's the 2025 figure. Every year, hopefully it goes up, but that is if you're eligible for the full benefit rate. If you are we going to talk about the 1/3 yet,
Uh,
or
I don't think we'll go into that. I think that would take too
uh,
much time. So,
yeah.
what I would say about that is that if you are living with somebody who you might share living expenses with, maybe you're 18, 19, 20 years old and you live with your parents, basically, if you would pay your parents' rent, that might increase your benefit. So you might have a lower benefit that's in the $600 range. If you
Mhm.
paid your parents rent and documented that, that would then increase your benefit to that 967 rate. Additionally, some states, but not all states, have what's called the supplemental state supplement program, or SSP. And that program allows individuals who live in a specific state to get money that's from the state.
Right.
And basically it increases that amount, that 967. So for example, in New York State, they have a state supplement. California has some state supplements, and sometimes it's depending on your disability. Sometimes it depends on your living arrangement, different things like that. So it is very important when you move and you're on SSI to let people know, let Social Security know. Great. So Kris, why don't you tell us a little about um, why reporting your income when you do work is important for Social Security to be aware of?
So that, oh my goodness, I have the 3 R's of working with when you're working and receiving Social Security benefits. It's report, record, and review. You always
Mhm.
want to report. And the reason you want to report is Social Security has the ability to look at all of the public records. And as things are getting more digital, more technical, and databases are easily accessed by Social Security, they're going to know when you start working. But you don't want to depend on them knowing that, because if you do, you're going to end up in an overpayment situation. You're going to end up in an overpayment situation. And that means an overpayment occurs when you are receiving too much from Social Security, and then they're going to want it back. So it's very important to report that you're working. You want to record any, what we call, for this, the sake of this webinar, we are talking about blind work expenses specifically. So any expenses that you pay for out of pocket that allow you to work. Also, because they are blind work expenses, this could include the taxes that are deducted from your paycheck, and it can include the food that you eat while at work. Then you want to review what you are submitting, and you want to review using the My SSA account whenever possible. Um, anytime you want to review what you're submitting to Social Security, want to review the benefits that are being deposited, so that you are the one in charge of knowing what income is headed your way. And if Social Security is putting too much money in your bank account, you want to put that aside and not depend on that.
Great. Additionally, regarding reporting your work activity, your earnings, and your blind work expenses, you want to do that by the 10th of the month after the month that you received payment in. With SSI, they specifically look at when was the money deposited into your account, not when did you perform the work activity. So as an example, I worked with somebody who was taking part in a work program through their vocational rehabilitation provider. And sadly, she didn't know how to fill out a timesheet. So she waited all the way until the end of her 12-week work activity. So then she got one big check, and that check was over $2,000. And she had no benefits for that month because they didn't care that
Right.
she worked over 12 weeks. They cared that she got that big check for $3,000 in the month of
Uh,
August. So it is
mhm.
important to report your income as well as your blind work expenses and other work type of events. The My Social Security account is great for reporting your earnings, both your net and your gross earnings. The net is your income after taxes, the gross is before. And, but you cannot report your work, incentives through that. So you still have to have contact with your local Social Security office for those work incentive, reporting requirements. They want to
Hey,
see what you're reporting.
right, Lori, I have a question. How do you, when people ask me how best is it to report your expenses, I tell them that either they can walk in
Mhm.
and submit them, but to make sure and get a receipt because it
Yes.
is in the POMS. You want to get that receipt. Another option is to fax those items in. Um, and then the third and last is mailing, because so much of the time
Yes.
mailing gets lost. What do you think? What do you tell your people?
I totally agree with what you said. I do have reservations with faxing because sometimes pages can get lost, or your page 5 may get mixed in with somebody else's page 11, and so it is
Mhm.
important to, on your receipts, if you're faxing in a bunch of receipts, on every single, like if you take copies, say you take copies of your receipts for your meals consumed at work, and you put 3 receipts on one page, you have your name and your social security number and date of birth on the top of each page, and number each page. Um,
Yes.
yeah. So, and you don't have to, if you have a family member or a friend that might be able to drop off the material at Social Security and wait for the receipt, somebody else can bring that material in for you. Since you're working, it doesn't need to be you. It could be somebody else. Great. So let's talk about the different types of work incentives. There is the general income disregard and the earned income disregard. Why don't you discuss what those are?
So the general income disregard is for any unearned income. So some people receive both as Social Security disability insurance, or maybe they're receiving childhood disability benefits, which used to be called disabled adult childhood benefits, because Social Security was to keep us guessing. But basically, what that is those are what we call Title II benefits based on either your work activity or the work activity of a parent. We'll get into those next month. But if you are duly eligible and you receive a little bit of Title II benefits, you would put that in the unearned income, and you can deduct $20 from that total amount to find out what your full countable income is. Other times, if people give you $100, Social Security could say, "Oh, well, we're going to allow you to have 20 of that without affecting your benefits, but the other 80 should be coming off of your benefits." So it's basically any unearned income that you receive, they will disregard $20, and the rest of it they're going to put in their calculations of seeing how much in benefits you receive. The earned income exclusion is $65. I know they're really generous, aren't they? Anyway, $65 is what you get to deduct from your gross earnings, to and this is before all the rest of the deductions. So if you earn $2,800, you can automatically disregard 65 of it, which was going to bring your starting numbers down to 2,735. If you have no unearned income, you do get to take that $20 and take it away from the earned income as well. So that's also there. Oh, I think that's
Yeah,
pretty
that
good.
covers it. Yeah.
Mhm.
Okay. Our next topic that we're going to cover is called the student earned income exclusion. And this is for individuals prior to their 22nd birthday. And they have to be working,
Going to school.
working and also going to school. You need to let Social Security know that you're going to school, that you are attending school. And once you graduate from school, even if say you graduate at 20, that is no longer eligible to you as a work incentive. So let's talk a little bit, Kris, about what the student earned income exclusion is. It's a bit tricky.
It is a bit tricky, and yet it is a really powerful way for someone who is under the age of 22 to get some experience, get some work experience, get some extra income, and not jeopardize their benefits. So first off, you need to be a full-time student. This can be a full-time high school student, college student, trade school student. There's a good definition in the POMS of what a full-time student is. And if you are, say you're going to school in the spring and you have your summer off, you want to get a summer job, you can earn, oh gosh, for 2025,
2000,
350.
2,350, yes.
All right, a month with a maximum of 9,000.
640.
Thank you. They change every year,
Teamwork,
so sometimes I
teamwork.
forget. Thank you. So it's 2,350 a month, 9,640 a year. So that means that you could earn up to that 9,640 and still maintain your benefits as long as you are a student under the age of 22. Uh, and it's a nice thing. So if you're making $2,800 in a month, you go through and you automatically get to disregard that's 2,350. So that I think that's I'm not going to go any further in my head because that's
Nope.
part of the what we're going to be
Yeah,
using
we'll be
for
going into, yeah.
our
So,
example.
and the annual limit renews, every 12 months. So,
Right.
and you
So if
can, go ahead.
I was just going to say, so, if you are in December and you've got this job and you're right up there against the limit, and then January rolls around, you've got a whole new annual amount.
Mhm.
The other nice thing about this is you are developing you're paying into the system. So if you remain on benefits for whatever reason, you soon can start earning the Title II benefits amounts sooner rather than later.
Yes, because as an individual, say at 20 or 21 years old, to receive Social Security disability insurance, you need less, what they call quarters of coverage, and we won't even explain that. But basically,
Yeah.
I have had youth who started working at 16, and by the time they're 20, they're getting some Social Security disability insurance as well as supplemental security income because they're building their resources. Okay, so let's move on to the next work incentive, and we're just going to do this real quick because we are focusing specifically on blind people through APH, and we are assuming that as a beneficiary, you are coded as legally blind by the Social Security Administration. So it's not that this wouldn't apply to you, but most of what would be covered in this would be able to move into blind related work expenses, which will be the next thing we cover. So Kris, can you explain impairment related work expenses?
Impairment related work expenses are or expenses you pay for out of pocket that allow you to work. So, and these generally, especially with this Title 16 SSI, only apply to people who are not statutorily blind. by definition. And so if somebody uses a wheelchair and they are paying for a maintenance program of $100 a month, it would go into the impairment-related work expenses. If they have prescriptions, it would go into the impairment-related work expenses. Impairment-related work expenses must relate specifically and directly to your disability and allow you to work.
Yes, and it could be the cost of a care attendant while you're at work. It could be the
Mhm.
cost of disposable um, medical
But
products, things like that. So great. And the big topic of the evening, blind work expenses.
love those blind work expenses. They're so generous. So blind work expenses, they they relate to, yes, same thing as impairment related work expenses. So if you have a subscription to IRA, if you have transportation costs, of course, anything dealing with a guide dog, meaning their vet bills and their food, um, not their toys. Unfortunately, even though we love them and we want to spoil them, the toys themselves are not generally considered work expenses, at least in my experience. Maybe you've had other luck with that.
I've never
Um,
considered it.
I mean, you got to have your dog with healthy well-being, right? So,
Yeah.
anyway, so then we also have the taxes that are taken out of your pay stub. Those are blind work expenses. The food that you eat, you consume up to $10 a day now. Um, for blind work expenses. And that food can be brought from home as well.
Yes, it could be food that you prepare or somebody prepares at home. Um, but again, you would have to have documentation that you spent that money.
Mhm.
So yeah. And what about transportation, getting to and from work? What if I want to take an Uber or even paratransit or the fixed route bus? Would those be covered as blind related work expenses?
Yes, those would be
Yeah.
considered blind work expenses.
Okay. So now we're going to move on to another work incentive, which is the Plan to Achieve Self-Support, or PASS. And this is primarily for individuals who are getting both, who have some additional have funding maybe from income and wouldn't be eligible for SSI because they have too much income coming in each month, or maybe they get Social Security disability insurance, um, things like that. So a plan to achieve self-support is a plan that you write out with the approval of the Social Security Administration, and the money in the that you put aside into this special account each month is approved by the Social Security Administration, and it covers things related to employment or starting a new job, a small business, a personal business of some type. So it has to be related to either your job or starting a business. So you could write a plan to achieve self-support for you to take courses in, say, vet care at the community college. And you could put money away each month to go into that account, and that would then, the money that goes into the account would not be counted, and you would then become eligible for SSI. So say you put $900 from your job into a pass account each month, then you would become eligible for the SSI, and that money that goes into the account would then be spent on your education. You have to spend it on that. If you don't, you're violating the regulation. Uh,
Yes. So
anything
with
else you would like to add, Kris?
Yeah, with past plans, I mean, they really are powerful. And
Mm,
if you, especially if you are hooked up with a vocational rehabilitation
mhm,
agency, or, blind commission, and you can get your VRC to help write this plan, they are great. They allow you to, like Lori was saying, save up for these things, whether it's for business or education, um, uh, assistive technology that is too expensive for VR to pay for, or something like that. You mainly want to show that by saving on the past plan, that you are going to either eliminate or greatly reduce
mhm.
your dependency on SSI by attaining the goal that the past plan is setting.
Right. Exactly. Fabulous. And there is a specific form to fill out with the Social Security Administration to write that pass. And there are people that are specifically trained to help you write a pass plan. They can be tricky, but they can be a great resource. So great. So let me do a time check. Check. Oh, 6:27. Okay.
Hey, we're doing good.
Yeah. Um, so Kris, do you want to talk a little, maybe in about 3 minutes, about some of the recent changes to the Supplemental Security um program, and
Yes,
then we'll move into our little scenario?
yes, I do. So when last year there was a lot of changes within Social Security, and specifically the ones we're going to talk about tonight deal with SSI recipients. Um, and they deal with the in-kind support and maintenance. The really big one that everybody was talking about, and it makes a huge difference, is the food for in-kind support. A lot of times, if somebody, a family member, an agency, a friend wanted to treat a person on a regular basis to food, say, hey, I'm going to buy you groceries or whatever. That and Social Security was alerted to it, and they found out about it, which they should. You should report all these things. uh, they would then say, "Oh, well, that's in-kind support and maintenance, and so we are going to deduct uh, the value of that." And most of the times, they'll just deduct everything by 1/3.
Yeah. So
This past year,
I was just going to say, for example, it used to be that if you received food assistance from a food pantry, that in-kind support would technically reduce what Social Security had to give you because you had somebody else helping you with food.
right,
Um, so that is no longer the case.
correct.
Um, yeah, great.
And then the other thing that's happened is they have included SNAP benefits. So if there is I just lost my brain. Public assistance household,
Hmm.
so that every person in the household is receiving some sort of public assistance, SSI, TANF, SSDI, and uh, food. Then that's considered a public assistance household, and in-kind support in-kind support and maintenance, I can't speak, is not calculated with that. I don't know if I'm explaining that very well, but that's basically the thing there. Um, and then the other thing that came down last year that was really big is the overpayment. Um, and it used to be that if you had $1,000 overpayment, you could and were on SSI, strictly on SSI, no other income, you could call up Social Security and say, hey, I have an overpayment of $1,000 or less. I can't afford to pay this back. And there was an administrative waiver. This year, or in 2024, they increased the amount from $1,000 to $2,000. So, am I missing anything?
No, I don't think so. I think that covered it nicely. So why don't we move into our little scenario? And if we have time, we will take a few questions. And we will be sending our little scenario out to everybody who has registered for this webinar. So that will probably happen tomorrow. And so you will have the material to review for yourself. So it's always nice to have that as a little example for you. So our scenario is Jay is 18 years old and attending college full-time. He will be working at a summer job for 35 hours per week at a rate of $20 per hour. Jay will receive a paycheck on the 15th and the last day of each month. He will be working in the months of June and July. He receives SSI of $967. He will be working 4 weeks in each month. He is eligible for the student earned income exclusion for 2025, and the maximum amount for the month is $2,350, with an annual limit of $9,460. Jay's gross earnings are $700 for 4 weeks, totaling $2,800 per month. So he's clearly increasing his earnings for those 2 months by quite a bit. His taxes each month will be $420. He uses a guide dog and pays $50 per month for food and an annual vet expense of $700 broken down to $58 per month. You can take a large expense such as a vet bill or the purchase of assistive technology and spread it out over a 12-month period to reduce your earnings, not only in that month, but for the whole 12-month period. Meals eaten while at work equal $160. He also has a prescription for medication of $2. Transportation to and from work costs $6 with a monthly cost of $120. Blind work expenses total $820. Okay. So unearned income is $967. That's his SSI benefit. Countable earnings are the hold on one second. I just advanced too far and lost my place. Okay.
It's a gross
Okay.
earnings.
Gross
And remember-
earnings. Gross earnings are $2,800. Student earned income exclusion is minus $2,350. So you take your $2,800 and then you take away $2,350. So that's a large chunk of his income that's not counted. The remainder at that point is $450. Earned income exclusion is $65. Remainder is $385. Impairment related work expenses are $0. because he's blind, so we're going to take them off as blind-related work expenses. Remainder is 350. Fabulous. This is where you're going to really get to understand why the blind-related work expenses are so important compared to impairment-related work expenses. You divide your 385 by 2, which equals $192.50. Then you subtract your blind work expenses. Okay, so that was 810. Total countable earnings are 0. So his $2,800 doesn't get counted by Social Security for that month. So he gets a full SSI check of 967. I know I went through that rather quickly. And like I said, we will be sending this out. Do we have any questions, Katie, at this point?
We do.
Okay.
All right. So the first question is, can you set up something where your income or part of it goes into a third-party trust?
Oh, okay.
But you could then still keep your benefits.
Can I take that?
Yeah, go ahead.
So yes, you
Let
can,
me
but
just,
remember,
I was just going to preface this by saying that we are not trust lawyers. And so,
oh,
and
yeah.
some of this, while Social Security SSI is a federal benefit, some of it will depend on what your state's restrictions are. Go
Right.
ahead.
And so depositing is great, but remember, it's always income first. You're always going to have income first and resources second. So if you want to protect, you're still going to have that resource limitation. And the best way to deal with that is having an ABLE account, which is a whole another webinar.
Yes.
But remember, it's income first,
Right.
resource second.
And as long as you are earning the income, even if you took earnings and put it into a trust, Social Security doesn't care that it went into a trust. What they care about is that you physically earned that money. You worked, you got paid.
All right. Next question is, this is a lot of information and things to keep track of. Do
Oh,
you
yes.
recommend that especially a student or anyone really, work with an accountant or a tax preparer to help them, make sure that this is all done correctly, and how can that be managed?
Accountants and tax preparers don't know Social Security.
Right.
What I would say is good benefits counseling. I've been doing benefits counseling since 2020. No, I'm sorry, 2012. And before, and that's only as an individual who is certified. Prior to that, I was doing it, but not with a certification. And really, specifically for individuals who are blind or somebody that might have complex health needs, it's really best to find a certified work incentive practitioner. I know I'm saying it like it's a piece of cake, but your local Department of Rehab might be able to help you find people. I personally work through the American Dream Employment Network, which is a national provider, because I'm able to do these types of things nationwide. Kris, you want to talk a little about how you do yours?
Yeah, so I actually have a contract with my state's Department of Services for the Blind here in Washington State. I also do take private clients, but I do have to charge. I'm working on getting to be a nonprofit, but unfortunately, I have to pay my bills too. So there is also the Oh, I want to say the ticket to work.
Yes.
You can
Mhm.
call Social Security tickets to work, and they can help you with this. But the accountants and tax preparers, they don't know Social Security. And what we're talking about with Social Security work incentives, they don't understand it.
The
They
other
really don't.
The other thing to remember that is if you take your guide dog expenses off as a work incentive, you can then not take it off on your taxes. Because that would be like double dipping. So you really, it is much better as a work incentive. Because you're you offset your earnings with those types of expenses.
All right, we have a couple more questions here. Is there a time limit to spend the money on a past plan?
Yes, a past plan, is it 36 months?
They've extended that period. They would really like you to have it done within 4 years, I believe it is now. And I would have to go back and double check my palms, but I want to say it's about 4 years. But no less than, I think it's no less than 18 months.
Yeah. Yeah, so it's something that it's, you can't really say like, oh, I'm going to put money in a past this month, but not next month, that type of thing. It has to be a recurring thing, and it has milestones that
Yes.
need to be met. And if you don't meet those milestones, and if you don't do what you said you were going to do with that money, not so good.
How would someone determine if they receive benefits for legal blindness if they have multiple disabilities?
You can request from Social Security a letter of declaration, meaning that what your disability is. There's also what's called a benefits planning query, BPQ as in Quebec, Y as in Yankee. And that's a document that Social Security generates. Sometimes they send you the wrong thing, but on that document, it should say if you were listed as legally blind. I will tell you, at
Yeah.
one point, I only worked with people who were blind. 90% of my clients had their records coded wrong because Social Security has something called visually impaired. They also have legally blind. And a lot of times people would get coded as visually impaired somewhere in the system, but you can have that changed. It can take a while to get it changed, but you can have it changed. And it's important,
Another,
particularly when on SSI.
yes, and it is what what I see out here on the West Coast at least is statutory blindness.
Yes, right. Legally blind and statutorily blind. Well, it's Social Security splitting hairs because legal blindness
Exactly.
is the same thing as statutory blindness. I will also tell you that Social Security does not accept documentation from a vocational rehabilitation provider as documentation of legal blindness. It has to
No.
be from an eye doctor, not even a general practitioner. That's how far they split their hairs of determining medical documentation. You
Oh,
can submit a letter from your local department for the blind, but it's only supporting documentation.
all right. Another question here. For the scenario that you described, does the student have to fill out a form every month to show that they are still entitled to the benefits, or does the individual keep track themselves? How does that work?
So basically, when you're eligible for the student earned income exclusion, say you go on benefits and you're not working. I'm sorry, not attending school. and then you're attending school. As soon as you are enrolled and have a letter of acceptance, get a letter from the registrar stating that you are attending whatever the college or trade school is. Every year, update that document with Social Security so they can see that you are still enrolled as a full-time student.
There's also, don't be surprised, Social Security caseworkers are overwhelmed with so much that some of them don't even recognize it at first, and you have to write the letter and you have to point it out to them at times.
And we spoke about this earlier. Again, when you go and submit that type of documentation to them, make sure you get a receipt that doesn't only say you submitted one page. You want the receipt to say what it is.
All right, and just a reminder, if you do have questions, feel free to put them in the chat. We are not taking raised hands this evening. Our next is a comment that just says, thank you for this great information. It's not often discussed or shared in transition meetings with the voc rehab counselor. So this participant is really appreciative of this information being shared tonight.
Thank you for that, because we know it as practitioners, and it breaks my heart when I hear from parents and from youth particularly that, oh, yeah, I can't work because, my family depends on my benefits. Well, that's fine. I respect that. I understand that. I grew up as somebody who was on disability benefits, and I know my family, that was part of their surviving. But I had no clue when I was a teenager how, when I did summer work activity or, different programs, how my income would affect my benefits. And ironically, that's how I wound up with an overpayment in my early 20s. But if I knew then what I know now, I wouldn't have.
I so agree with you, Lori. I mean, there's so much misinformation out there, so many myths. And I think that's one of the things that I like best about doing these webinars is getting let's get the truth out there. Now,
Yes. I tell my clients when we first sit down that I don't want to know what you know about Social Security. I want you to listen to what I have to say about how work affects your Social Security. Because if you tell me what you know, then I have to spend twice as much time dispelling those myths. And, people try to be helpful, but they don't always know what they're talking about.
And Lori, this is Richard. I know we have a few more questions, but you might want to tease out what folks can expect in the second half of this webinar in a few weeks.
Sure. I'm just gonna, Kris, do you want to do that? My eyes are
Sure. What happened? Well, in the next couple of weeks, we're going to be looking at the other side. We mentioned it very briefly in Title 22, Title 2 benefits. So with somebody who has worked in the past, and maybe they have enough quarters built up that they're getting some SSDI, Social Security Disability Insurance, or they're getting benefits from a parent's work. So they're receiving childhood disability benefits, or you might know them as disabled adult childhood benefits.
or survivor.
Or survivor benefits for disabled widowers. These have work incentives as well, and they're different from the work incentives that we've talked about here. A lot of similarities, but still differences. And so people who are receiving both of these types of benefits also need to understand both types of work incentives.
Yeah.
So
It is, that will be on October. Where did I get that from?
February 6th.
February 6th.
And if you're watching this video, it'll probably follow this video as a two-part. Katie, I think we had another question.
We do. We have a couple more. So how many units is considered for a full-time student? I hope that makes sense.
Yeah, I don't have that off the top of my head.
So with full-time students, because this is what we talked about with the pre-eds, if you're in high school, and then if you are in college, it's usually at least 8 units, but you have to look at your situation. Sometimes if there are extenuating circumstances, you want to look into that. There are some exceptions, but generally a full-time student is anywhere between 8 and 12 units.
Yeah.
And
All
that gets
right.
into quarters versus semesters,
Yeah, I was
like I
just gonna
said.
say, and then you have quarters versus semesters and all that. Yeah, and the fact that you definitely couldn't take 8 or 10 credits during the summer,
Mhm, mhm.
All right. Are work incentives similar for someone who is receiving SSD?
Well, there
That's a
are some,
teaser.
yeah, I don't think we're gonna go into that tonight because we don't want to confuse people. So stay tuned, and that will be what we're covering on February 6th.
And those are all the questions at this time.
Great. So why don't we talk a little more, Kris, about what is an ABLE account?
I love ABLE accounts.
Me
So
too.
ABLE accounts are probably the best thing around. And they are a great alternative to someone who wants to start saving their money that you earned. You don't want to have to spend it all. So how can you save it and not go over resource? ABLE accounts were signed in by President Obama,
Mhm.
and they allow someone who is receiving needs-based benefits to save money and not have that money counted as a resource. And you can use this money for qualified disability expenses. Qualified disability expenses under the ABLE account includes food, clothing, rent, utility bills, medical bills, transportation. If you want to go to a movie, you can pay for the movie ticket with your ABLE account. You just can't pay for your friend's movie ticket. It's whatever you need to have a better life experience, which is what ABLE stands for.
Right.
They do have some limitations. This year, I'm sorry, but you can only deposit a total of $19,000 into your ABLE account this year. So go tell Daddy Warbucks that he can't give you more than $19,000 in that ABLE account. And for our family and friends who love to give us monetary gifts, if they give it to you in a check form that you have to deposit into your account or as cash form, that money, and you're receiving SSI, that money is counted by Social Security and will be reduced from your benefits. But if they put it directly into the ABLE account, it never touches your hand. You have it in that ABLE account to use as you see fit. It is not counted. Also, if you have an ABLE account and you are working, you get to deposit up to the federal federal poverty level, additional funds. So if you've got the $19,000, you've hit that full mark, but you're working, you can deposit last year it was an additional, I think, 12,600. I'm not sure what the new
I don't
level
know
is.
this year's, yeah.
Yeah, but it just came out and I didn't read that email. But anyway, whatever that level is, that's what you get to put in there additionally. So you're talking about putting in a potential of over $30,000 a year into that ABLE account. The ABLE account also allows you to make investments. And we're not talking about, oh, let's see, I'm going to buy 5 shares of Apple, some Amazon, and let's put some plug in there as well. No, they're looking at portfolios. Do you want a conservative portfolio, moderately conservative, moderately risky, or high risk portfolio? And after you have $2,000 if in your savings section, you can start putting that into investments. If you have $99,999 in your ABLE account, which means you've had it for a while, you can still receive your SSI benefits if you have no other income. But if you go over the $100,000 mark in your ABLE account, your SSI benefits will be suspended until you are back under the $100,000 mark. A lot of
So
people
either
use,
if you started an ABLE account when they started, the likelihood of you being there is not very good right now, but it is something to be aware of. It's also important to be aware of the fact that when Kris mentioned that means tested programs, so things like Medicaid or Medicaid waivers that individuals may be on, cannot count the money in an ABLE account or the interest on that account as income or any way, shape, or form associated with Medicaid. However, different states have different limits for that. You also don't have to invest in your specific state's ABLE account. So you you could say invest in Massachusetts or Virginia. Not all states allow out-of-state residents to invest. New York State has an interesting thing where they run theirs through their state pension and retiree fund. So their out-of-state contributors tend to pay a very high rate. So that's also something to look at. But you can go to the ABLE National Resource Center for more information on ABLE accounts. And if there's enough interest, maybe we'll do a whole webinar on ABLE accounts.
We have
And
a
we are-
question if we
And
can
we're
squeeze
just,
it in.
and we can squeeze it in and we have to wrap
Yeah.
it up.
All
Yep.
right, what if you have an ABLE account, but are no longer on needs-based programs, but just on SSDI and Medicare? Is an ABLE account still useful?
Yes.
I tell people if you are eligible for one, get one, because you never know. You never know when you're going to be in a situation where you're in a needs-based, where you need assistance from that means-tested benefit. And you don't
Yep.
want to, you can still have that there available.
The other thing is, it's a great thing to have because you might not be old enough now that you have a required distribution from an IRA, but you could take a distribution from an IRA and move it into an ABLE account and still have interest earned on that account. So, it adds more money to your pocket. Well,
And are
I
there
want to,
any
Oh.
age limits on this? ABLE?
yes, there is an
26.
upper age limit of 26, and they are looking to expand that, but it hasn't happened yet.
Next year.
Yeah.
Next year, it goes up to 46.
Yeah.
Meaning you have to have been deemed disabled before age 26 now, but starting in 2026, it's going up to 46.
Lori and Kris, thank you so much for this webinar, and we look forward to having you back in 2 weeks, or 3 weeks, I should say.